Hello, everyone. Happy Friday. Guys, last week I was super sick. My husband got sick, of course, got sick. So we both were homesick together, hence why we did not have a recap last week. But I'm feeling about 80% better. So we're definitely going to continue with this week's weekly recap. So, a lot's going on this week. Let's jump right into it. So, gold reached an all time high this week. And so, that of course has been the trend for quite some time now. So, if you're someone who is not currently investing in gold, it is something you should seriously consider. Investing in things like gold or silver are a great way to diversify your investments, and they're relatively easy to access. And so, the reason why gold has increased so significantly is because investors tend to run to gold or gravitate to gold when there is lots of uncertainty in the economy or in the overall stock market. So gold is like their safe haven. And we've had lots of uncertainty in the last 5 years or so for many different reasons. And so that is why we've seen gold increase so much, and it will continue to do so. Now, I'm going to share my screen so we can take a peek at where gold is presently. Um, let's let's see. Can you guys see? Oh, fantastic. I have my big screen on today. So if you see me looking to the side, I'm looking at my larger monitor. So gold is at $3,719 per ounce, which is crazy to see. So just for context, if you look at gold, it has increased by 91% in the last 5 years. And if you see the chart, somewhere around 2024 is when things start to take a big increase. And of course, lots of reasons for that. Won't go into it right now, but this is definitely an investment or an asset you should consider investing in. Value, regardless of where you are in the world. It's a relatively liquid as well. Now, if you're wondering, well, how can I buy gold? Great question. So there are a few ways you can invest in gold. You can invest in gold directly or indirectly. So directly would be buying physical pieces of gold. Now you can do this in a few different ways. So you have brick and mortar locations where you can buy gold bars, gold coins, gold jewelry. Costco, of all places, actually sells gold bars, gold coins, and silver bars and silver coins as well. And they are investment grade gold and silver. So it means it has a purity of 99.9%. You also can buy gold and silver through your brokerage account. So many companies like Fidelity, for example, do give you the option to buy gold or silver or platinum, anything like that. But the only catch is some of these brokerage firms do have a minimum to make that purchase. So I think with Fidelity, it's like 2,500, and some other firms it's like 3,000 or 4,000. So you need to have enough money, right, to make that investment. There is also a company called Vaulted. So Vaulted actually gives you the ability to invest in gold and silver regardless of your budget. So if you only have, let's say, $100 to buy gold, you can do that. You can buy $100 worth of gold or silver, and you just can do that on repeat every pay period, every month. Just buy a little bit more, a little bit more, and eventually you'll have like one full bar of gold. Now, they do give the option to either have the gold or silver kept at a vault, or you can have it shipped to you, but they do charge a fee for that. And the gold and silver with this company as well is investment grade as well. So it's pretty awesome. I do like the platform. It's relatively user friendly. They have an app you can download so you can buy and trade on your phone on the go, which is really nice. So I will put an affiliate link to Vaulted in the caption of this video. Um, Writing a note to myself. And actually, I can put it in the comment section while I'm here so somebody can get it if you're here live. I think this is the link I'm supposed to use. Okay. Here is an affiliate link to learn more about Vaulted. And I probably should do a live stream, but I figure we'll talk about it briefly. So gold hit an all-time high. I think we'll just see that continue to rise over time. Now, there may be some dips where it drops in value just a little bit, but for the most part, I don't see gold clawing back in value at all, in my opinion. Now, silver, on the other hand, silver is not at its all-time high, but it's getting pretty close to it. It's getting pretty close. So I want to say in terms of all-time high, I think for silver it's like $50 and it has increased by 60 last 5 years. Now, the great thing about silver is it's a lot more affordable. So gold is, again, almost 4 grand for just an ounce. So for most people, that might be a bit much, but silver is definitely a lot more affordable and accessible. Now, the indirect way to invest in gold and silver is to invest in companies that mine, sell, or produce the product. So you have companies like Newmont or AMD as an example. These are companies that are in the gold industry. So that's an indirect way to be in the industry without buying the physical commodity. So something to think about if you are looking for an easy way to diversify your portfolio. Let me stop sharing since I think we're pretty much done with that. Next up, the Fed did cut interest rates by 25 basis points. Now, that's pretty interesting. I know there's been this push and pull argument between Jerome Powell and President Trump in terms of interest rates. Trump has wanted him to reduce interest rates forever now, where Powell is more cautionary in terms of not, how to put it. So there's so much going on in the economy between tariffs and everything else that he was kind of holding back to see what plays out before implementing a rate cut. But I do think also he's feeling the pressure. So he didn't give them what they wanted. They wanted a full percentage point or at least 75 basis points in terms of a reduction. He gave them 25 basis points as, I guess, a compromise. But I will have to say, with that reduction in the rate, it's not going to move the needle at all. It's not going to really impact. It'll slightly impact mortgage rates and car loan rates, but not enough, in my opinion, to really stimulate the economy. But again, only time will tell. Next up, not sure how relevant this is, but I figured we'll talk about it briefly. So there was that Facebook privacy class action lawsuit. So they were paying out $725 million to various Facebook users. So you had to have filed your claim, I think almost 2 years ago, essentially. And so they're now sending out those payments. So they began issuing payments on September 9th, and they will continue to roll out those payments over the next 10 weeks. So I know I myself personally got my payments, I want to say like Monday. Now you will receive an email notification about 3 to 4 days before you receive that payment, but don't hold your breath. It isn't a lot of money. I think I got like $40 from it. So, but just FYI. Now, depending upon what you filled out in your claim form, that will dictate how you receive your payment. So I think the options were direct deposit into your checking or savings account. You could use a payment platform like Zelle, PayPal, I think Cash App, or you could receive a prepaid MasterCard and have that mailed to your home. So depending upon what you chose, that's where you're going to receive the money essentially. So keep an eye out for those emails. It's not going to be spam. Those are legit emails, and you will see the money again between now and the next 10 weeks. Next up, Klarna. So Klarna had their IPO actually on September 10th, but I wasn't live last week because I was sick. But let's look at the stock price because I haven't looked at it. So let's see. So if I say the last, let's do the last month, I guess is a good time window. So it IPO'd on September 10th. So the price was about, excuse me, $45 per share at the open. And then at close, about 42. It went up to not much, went up to 46 as a high. So it's kind of stable, I guess you could say. There's some slight fluctuations, but it's kind of in that 44 to $46 range, which is pretty interesting. Now, Klarna, of course, has experienced a lot of backlash in the last few months because they are doing so poorly in terms of they're seeing an increased default rate on their loans they have out to their customers. So they essentially had postponed their IPO because of that. So now I guess I'm not sure what they did in terms of that, but they did feel comfortable to go forward with the IPO. And so now they are here trading on the US stock exchange. Now, Klarna has big plans. They are not planning to only compete with companies like Affirm and Afterpay. They want to compete with the big boys like the MasterCards, the Visas, the American Express. So they are coming with a vengeance. So I am looking forward to seeing what Klarna does now that they are here in the US officially. And so it'll be interesting to see. I think competition is good for the markets in general. And so to have a brand new company and enter newer industries is definitely going to be very, very, very interesting. So I'm looking forward to seeing it. So I think that's it in terms of like highlights for the week. So let's just jump right into the weekly recaps. So I will have to say it was pretty light this week in terms of earnings calls and press releases. There really wasn't much to talk about. So I think I have 4 companies we'll talk about, 3. Yeah, only 3 companies want to go over during tonight's live stream. So I'm going to stay right here on this tab. So hopefully my screen does not go black. I know we've had. So first up, we have General Mills. General Mills sell lots of breakfast foods and things like that. And so for them, their revenue is down 7%, but net income is up 100%. And so I was like, right, that math doesn't math, right? So you have reduced revenue, but your profitability almost doubles. How does that math make sense? So here is the reason for that. So if you look here, you see a divestitures gain of about 1.1 million. Presents is General Mills did divest U.S. yogurt division. So that includes brands like Yoplait, Go-Gurt, and Oui. And so because of that, they saw a financial benefit on their P&L statement. So that is why their net income is almost double what it normally would be. But if we were to normalize those numbers, and when I say that, this also impacts revenue, right? So the reduction in revenue also includes the fact that the sales of that division isn't in these numbers anymore either. But if we were to normalize it, so to have an apples to apples comparison of this is their Q1 of this year versus Q1 of last year, their revenue would have been down 3%, been down 18%. So if we were to take out this financial gain of 1.1 million, that's what their true numbers would look like. So General Mills is not having a good time in terms of revenue and profitability. And so they are focusing on increasing revenue. Now, what I find interesting, so in this press release, they do, let me see if I can find it here so we can look at it together. But they talk about, where is it? It's in here somewhere. I was just looking at this earlier. They were going to focus on new ad campaigns. Where is it? I really want to show you guys because it was definitely very interesting, and I wanted to be a very interesting statement, but I need to find it so we can look at it together. Oh no, where is it? Is it up here? I feel like it was up here somewhere. Innovation. No, that's not it. Oh, yeah, here it is, right in front of my face. So we will continue to drive further improvement this year behind disciplined execution of our price, new advertising campaigns, stronger in-store events, and exciting innovation. So what I find interesting about that is I think General Mills is like missing what's going on in this country. They don't have a pulse of what's happening. So for a lot of us, we grew up on a lot of General Mills products, right? So like Lucky Charms and Cheerios and things like that. We would think that going forward, we also buy those products for our children. But we are more conscientious consumers. So people are a lot more mindful of reading labels, looking at ingredients. And so if you look at the labels of some of these products that we all as kids, you realize that these really aren't all that healthy. And so, what they're missing is that people are more health conscientious and are willing to shop with other companies and other brands that might be not as mainstream, but they are offering organic ingredients, clean ingredients. And so, instead of focusing on improving their product, they're just focusing on the marketing. So when I see this statement, I look at this as they're going to just find more ways to advertise to kids, right? So think of when we used to watch Saturday morning cartoons, we saw lots of commercials for toys and foods and snacks. They're going to lean in on that, but also maybe start running ads on games, right? A lot of these kids, they're on their iPads, they're on their smartphones, they're playing games. And unless you pay for the ad-free version, you can just run ads in these apps and in these games so kids can say, Mom and Dad, I want this cereal or I want this snack. And depending upon the parent, right, some parents will be hard fast and say, no, we're not buying that. We're buying these things because we know they're healthier. But some parents will cave and give in. So I think it's interesting to see that they're not willing to improve their product, but they're just going to focus on improving the marketing of products that have bad ingredients. So that's just my little spiel on that. So I think they will continue to miss the mark until they start to read the room. But looking at their stock price, let's take a peek to see how well they did. So their ticker symbol is GIS. Again, General Mills. So let me go back. The earnings call was on September 17th. And so we see that shortly after, the stock price took a dip, but then it increased. So to me, that reads that Wall Street feels good about the future of General Mills. And so for them, the earnings call gave them promise for a good future. Now, General Mills does pay a dividend. They pay a pretty healthy dividend at that, in case you did not know that. The dividend yields about almost 5%, which is pretty decent, above average in my opinion. So yeah, very interesting. But I do think that for companies like General Mills, they also have to not only deal with more health conscious consumers, they also have to understand that we're in a recession. So people are not spending as much on groceries, either because they just can't afford it or they have other responsibilities. So they're kind of scaling back how much shopping they're doing in terms of groceries. That includes buying store brands, no frill brands, no name brands, instead of buying the name brand cereals and things that General Mills offer. So they kind of have two things that they need to overcome if they are going to turn things around to improve their revenue, but more importantly, improve their profitability. So next up, we have good old FedEx. Let me go back and find I'm hoping by copying and staying in the same tab, we don't have any issues with the audio and the visual of the live stream. So I'm hoping it's going to work. All right, so let's scroll all the way down. Nope, what I want. Here we go. So for FedEx, they had a pretty decent quarter. Nothing to rave about, but they're doing okay. So revenue was up 4%, and I love that they have the variance percentages in the column. I think all press releases should have that, but just my finance brain saying that. No, so revenue is up 3%, excuse me. And then in terms of net income is also up 4%. So we see that here. Now for FedEx, this is their Q1 press release. So their Q1 starts in June. So it runs June, July, August, and so on and so forth. So this is their first earnings call of their fiscal year, in case you didn't know. Now, what FedEx has noticed is they definitely saw an increase in demand for U.S. domestic shipments, but they've seen a decrease in their freight and international shipments, which that makes sense because we have tariffs, right? Tariffs are negatively impacting not only the companies that are importing the goods, but the companies that are physically doing the imports, like FedEx, UPS, and USPS. So what FedEx is actually doing, they're going to spin off their freight version. They expect to have that fully spun off as a separate company and entity that will be publicly traded, FYI. That should be fully in effect by June of 2026. And so I think they're trying to get rid of the dead weight because the freight division is kind of lagging versus the core FedEx business. So it makes sense that they're actually doing that. And also to help them improve revenue, they are going to be increasing all of their rates as of January 5th of 2026. The increase is going to be about 6%. And so I think they're just trying to take into account the new tariffs, the increased cost to do business. And so we will see how that plays out for them, if that helps them increase their revenue or if it will decrease revenue due to decrease in demand because of the higher rate. So it could really go either way. Yep, so I think that's it for FedEx. So let's take a look. Oh, my Apple Watch is about to die. Let's see, for FedEx, the ticker symbol is E as in David, X, in case you were wondering. Let's see. So their earnings call was on September 18th. Let's take a look at the chart. So it looks like basically right after their earnings call, the stock price shot up and then it kind of came back down just a bit. So definitely a positive response. And I think investors are probably looking forward to the spin-off. Next core business can thrive and hopefully do well. So that's kind of how I'm reading that. FedEx also pays dividends, in case you didn't know. And right now the stock is about $231. The stock price is down 23% in year. So they have to kind of regain the confidence of their investors. But based upon what I see here in the last 5 days, it seems that it's working, whatever they're doing. So that's good to see. And last but not least, so I chose Cracker Barrel, which probably sounds like a funny company to want to talk about. But the reason why I chose Cracker Barrel is because they were trending in the last few weeks, in case you didn't know. So Cracker Barrel decided to change their logo to this really plain and logo. And people were up in arms over this. When I say people were upset, they were upset to the point where they were able to correlate the new logo going into effect to a direct response, to a direct decrease in revenue. Like they saw a reduction of like 8% in sales because they changed the logo. How crazy is that? And they received so much backlash, they ended up changing the logo back. That's the power of social media. It is hilarious. I can't tell you how many videos I saw on TikTok, excuse my language, pissed off over the logo. And I say tons of videos. Like it was, I can't speak for Instagram, but it was definitely trending on TikTok. And so the executives kind of heard their customer base loud and clear. So they changed the logo back. And they're hoping that they can regain their customers and hopefully get their revenue back. So that's why I chose Cracker Barrel. I normally wouldn't have picked them as a company to talk about, but I thought that was pretty funny. So anyway, let's go to income statement. So if we see here, so for Cracker Barrel, this earnings call was their Q4 and also their full year, their full fiscal year of 2025. So just FYI. So their fiscal year starts on September 1st. So just kind of level set everyone on what we're talking about. So right now we are looking at their Q4 revenue results. So Q4 of this year versus Q4 of last year, revenue is down 3%. And then if you look here, their net income is down 63%. So, oh my goodness, that's like horrific. Now, if you look at the year over year for the full 12 months, their revenue is pretty much flat, which is not great, but not bad either. And their net income is up 13%. So while Q4 was disastrous, in my opinion, from a full year perspective, it is still pretty good. So yeah, but I think that they do need to focus on turning things around now that they've had this backlash. They're trying to rebound from it. Now, what Cracker Barrel is dealing with is also what other restaurants are dealing with. You have increase in cost of just your core ingredients, increased cost of doing business in terms of higher wages, higher insurance costs, and then just you're dealing with a recession. So people are less inclined to go out to eat when they don't have money. Or if they do have money, they're more mindful of how they spend that money because there's so much uncertainty. So this logo debacle definitely did not help their situation by any means. And so they have to like overcome that hurdle plus the other hurdle of the things I just mentioned. So the increased cost of doing business, lower traffic in their stores. And so they will hopefully have a fresh start in Q1 and they can turn things around in the first half of the fiscal year so they can end the year on a good note. So let's take a look at their stock price. What is their ticker symbol? I don't have it here. Just type it in here then. CBRL. Okay. So their earnings call was on September 17th. And if we see here, right after the call, the stock price pretty much took a hit. So it's down about 15% in the last 5 days, which is no surprise, right? They did not have a good Q4. They still have this logo debacle that's kind of hanging over their head still. And just the industry in general is having a tough time. So this right here does not surprise me. What does surprise me is they pay dividends. That's kind of interesting. I didn't know that. So, okay. So yeah, so that is it for today's live. Hopefully you found this information helpful and useful. Now that I am better, we will get back to our regularly scheduled program. And if you have any questions, feel free to put them in the comment section down below. And with that being said, have a great weekend. I'll talk to all of you guys next week. Take care.